What's up, bros, non-bros, everybody? Hey, happy Sunday. Good tidings to you all. Hopefully everybody had an awesome weekend. It is summertime for those of you guys that are Yankees like myself. You know, summertime is the time to be free. It's time to be fresh. It's time to enjoy the fruits of your labor and, of course, get ready to, plant the seeds for next year. I love summertime, man. June, July in Michigan, like nothing beats that. I'm over here in Florida now, but I love a Michigan summer. I hope you guys are enjoying it and you guys are taking advantage and getting yourself a little sunshine while the markets are just doing, whatever it is that they've been doing. So in today's video, I want to take a look at the general market indexes. Let's see what's going on. I wouldn't put too much into Friday. A lot of Fridays kind of a dump in some of the weird candles you saw were in the last 15 minutes. That's very common for OPEX, and so let's not read too much into that. You always have to take things with a small grain of salt and provide some level of context to it. As chart traders and technical analysts, we, often are just, people think we just draw lines all the time, right? But there is always some nuance to what we do. And so let's dig into this. So first things first, before you do any kind of weekend study, right? Before you do any type of weekend study, it's always important to take a look at the indexes. I like to do a 5-day sort on all my market indexes just to see where the heat was last week, but also to see like where could be the new, hot heat. And right now, because we've had a very narrow market, what I mean by narrow market is, right, there's been a handful of stocks that are leading the way. It's like basically semiconductors and, right, a couple of mega caps. There hasn't been that much hunting around for stocks. What I mean by hunting around for stocks is, right, doing those deep dives, doing those deep scans. They haven't really come to fruition because, it's been, right, a little bit of a narrow market. But you still want to go through this exercise because at some point the market will unnarrow and there will be a whole host of names that are really, really ready to party. And that's going to be really important because even though it's nice to buy Apple computers and, right, make your 5% or 3%, when you're talking about like generating some real return, some real alpha, that's going to happen on more of an unknown type of name. It's going to happen on stocks that are newer, that are fresher in their trends, that are not so long in the tooth. And so let's just take a look for shits and giggles, see where the heat is, even though we know we're probably going to end up with, having to do some of the same old stuff. It's not always the case, right? So I always like to do a 5-day sort. So you can see here, T2108 indicator. That's just a measure of market breadth. So market breadth did rise up a little bit last week, so that's important. This is the ETF for India. The India ETF is awesome, but there's just not that many Indian stocks that actually trade in the U.S. Unlike China, which has a whole host of, ADRs that are over here. The Indian markets do not have that yet, and that'll be a nice welcome addition if they ever do, but we're just not there yet. You can see here the transports are just kind of, they were up 1% last week. Nothing to really kind of write home about. If you're looking here, this is the IWC. This is your, right, market cap index, and this is just, right, this kind of range life. There's not really much for us to do in this. It's nice when you see something, you're like, oh, it looks cheap, but that doesn't really mean anything in the scheme of things. So we want to just kind of be mindful of that. If you look here, you've got also, right, the Magnificent Seven. We're also up 1.5%. They had a down 1.5%, so they were up 3% at one point. And this is just kind of grinding up here. We're in the Goldilocks zone. The Goldilocks zone is when you have, right, stocks that are just trending up your EMAs. You'll have kind of your green shaded area. That's the difference between the 9 and 20 EMAs. And when it's just shaded like this, telling you that the trend is strong. And, not much to read on this so far. XLE, the energy sector, did have a little bit of a pickup, but I would still say this is also in no man's land. It doesn't have, anything as day traders that we'd want to do, or short-term traders, swing traders. If you're an investor or something like that, sure, loading up on XLE while you're at the 200-day moving average, and finding some nice oil stocks, that's in the cards. But when you're just trading on a short-term basis. You want that hot heat. You need that momentum, and so we just don't really have any of that. Now, if you look on the downside, you see a whole host of sectors that were kind of falling off the cliff a little bit. Natural gas. Solar's got really hit. Solar's is interesting because it looked like they were rounding, and then we've just fallen off the cliff again. And, the debate performance by the Trumpster and Biden, I think that put a little bit of pressure on solar stocks, too, on Friday, as they really are reacting to, a potential Trump victory. And so you were down 4%, and you saw even the heavy hitters like FSLR get just smoked out. So we do have, probably some weakness in solar stocks. And, if the Trumpster keeps piling up in the polls, then that's probably going to put a little bit of pressure on that. And then you can see here, interesting thing, VIX was just kind of sitting around doing nothing, and you had a whole host of just nothing burgers. So when you're going through these indexes, what do you notice, right? You notice, a lot of weakness and a lot of range. Really not anything that you would say like, oh, man, these are like some hot trenders. I need to be a part of it. A very few of that, right? Semiconductors here, sitting right on the 20 SMA. But it's not like some beautiful pattern. You had a little bit of a reversal. I would say on Friday, things got a slightly euphoric in the morning, and then they had a complete reversal. And that's something to keep, that's something that we'll have to keep in mind. Was this just an OPEX thing? Was it something because the market hit right into highs, and so then you got a little bit of a rollover? If you see here, right, this was your kind of all-time highs on the QQQs, and we ran so hard into it, then rolled over, that we have this kind of, we ended up closing red on the day. And so you got a lot of these kind of wicks and reversal candles on the market. And so we'll have to be careful on that. Like I said, I want to take that with a little bit of a grain of salt just because of OPEX, but it could be something. We're going to, watch the price action. Well, let's see how the market opens up tomorrow. Let's take a look at the general watch list. Woof. This is not really my type of thing. I take that off the list here. I thought an interesting thing on yesterday was that, you did see a little bit of a run in some of these regional banks, and they're not usually the best movers. But, man, if you're moving 6-7%, that's all you need, right? That's a good day. You can see something like this, like SIFI over here. You've got a breakout over here. I'd watch and see if this has a weak open and we get some type of red to green. You never know with these type of things. They all have enough bases where, they could start to pick up some steam here, right? And so they all been kind of hit. It's very rare that these things follow through of recent, but the charts are looking okay on them. And you did have a volume pop on them. Once again, it was OPEX, so, we'll take that with a grain of salt. But that is a nice chart. If you didn't know that was a bank, right? You just close your eyes, do the stranger, and you didn't know that was a bank, then you would say like, hey, man, that looks actually pretty good. And so I want to add this in. I always like to do that kind of exercise where I'll take the actual watermarks off on my charts and I'll sift through stocks, right? Because like a lot of times if you saw the chart of Tesla, but you didn't know it was Tesla, would you like it? Would you really be that interested in it? A majority of the time it's actually no. And so we want to always keep that into the back of our mind. But let's add a couple of these banks just in case. Uber, you got a nice little breakout set up here. 1 test, 2 tests, 3 tests. You got your 9 EMA curling up. Guys, rule of thumb is you need 3 tests of resistance to actually break out. I like the overall look of this. If it does start to push through, I think your risk is down to the 9 EMA. If you're a swing trader, if you're a day trader, then we'll be watching to see if you can build out any type of pattern over this 73.25, and we'll start to see if it kind of builds, and I think the proper would be congeals above that level. Qualcomm tapped into the 50-day moving average. You had a nice upgrade on, I wouldn't say upgrade as a price adjustment, but you had actually pretty good range on this thing, 10 points. Let's see if it holds this 50-day moving average. It's very rare that we've been, it's been bouncing off the 50-day moving average really in its whole run. Now it is super extended. Look how many magnitudes it is away from its 200-day moving average. But I think for like a day or two, we want to keep an eye on this and see if it starts to curl its way back. The persistence and the duration of the trend in these semis has been a sight to see, right? And so we do want to just still respect that, even though they are a little bit long in the tooth. Adobe, this is going to need a pullback. I want to see if it opens weak and you marinate around this 200-day moving average. Guys, when you have stocks that have earnings out, right? So this stock has earnings out, and you start to just consolidate like this, and you break out that earnings high, you really get yourself a nice little subsequent pattern, which is called post-earnings announcement drift, right? And so we're starting to get that drift, and these things can often go for days to weeks to months, but we're going to need to see this kind of back and fill a little bit before it can pull off. But really like the look of it. The remount of the 200-day moving average is huge, and if you really think about it, how many tech stocks are even near the 200-day moving average right now? Not many, right? And so this is one to keep an eye on. Kava. This has been a little bit of, the flavor of the year. It's up almost 300% this year. But you still got a nice little breakout setting up on this. I'd keep an eye on this because, oftentimes when you have these stocks that are in this like kind of mid-90s range and they start to break through, they call that the $100 roll. Right? Back in the day, we used to have the $1 roll and the $100 roll, and those were actually real setups. And they're not as prevalent right now, but there is still something to say. I'd be shocked if this thing, didn't rip into the hundreds if it can come out of this zone, right? So let's keep an eye on that one. I really like the look of this Oracle now. It's a little bit slow. You probably have to trade the options on it. It only moves like 2% a day. But the options actually, they move pretty clean and not the most liquid, but you can see here, you can probably get 1,800 on some of these strikes. But I think this one is this is my favorite kind of setup, right? You have the gap over here, and then you got this nice kind of marination that's been happening. And so you've just been marinating here, and you're holding onto that 9 EMA. So there's very, very little selling coming in on the way. This thing is prime time for, a rip to, rip over highs and a continuation. Snappy Chatty. This stock's a thick noodle. What I mean by thick noodle is, it is got such a huge float that it trades a little bit like a grinder. I would think that this is a little bit more of a swing setup than a day trade setup. What I mean by that is that, if this thing can cook and book over this 17, you've got yourself a chance. But it's going to get where it's going to need to go in terms of percentage, but it's going to take a few days, right? So if you see here, you go from 14 to 17, right? But it took 1, 2, 3, 4, 5, 6, 7, 8, 9 days, right? So you can get the gains, but it ain't going to be in one day, right? It ain't going to be in one day because it's just too thick, right? So that's what I mean by thick noodle. Kind of like a Ford Motor Company. Even though it's a younger stock, it trades very, very similar. Onan, right? This has been the hot stock, hot stock of out of the sneakers. Nike's been dead. Some of the other ones are dead. Under Armour's dead. Does Under Armour make sneakers? I think so, right? Atrocious gym wear and, low-level sneakers. But the Onan here, these guys got the cloud shoes. They're like $300. I would not recommend paying $300 for sneakers. But we are in the age where adults wear sneakers in public. I find it disgusting and abhorrent. But, who am I to judge? Who am I to judge humanity, right? So you got the pullback right at a 50-day moving average. And you got the old breakout spot here. So you got a breakout, pullback, and a go. Dude, that's hot right there. And then I got Crocs on watch too for a swing trade. You've got the same type of deal here, right? So you got this big push, and you got a nice, easy, low volume pullback besides Friday to the 50-day moving average. Remember, don't read too much into volume on OPEX days. They're always going to be a little bit different. But 1, 2, 3, 4, 5, you got to work off, that overbought condition. Now you're right back into support. Looking at this for potential swing trade. It's got a decent overall look to it. Guys, add in some solars. They got crushed on Friday. Run, FSLR, all of them. ENPH. Let's see if this breakdown has legs. Oftentimes these things can be one-day fugazis. Dude, erasing, tens of billions of dollars off your market cap because of a debate seems a little bit weird, but that's trading in a nutshell, right? We react to news. We look at the price action, and even though it doesn't make sense, sometimes that stuff happens, and we got to just be there for it. So we've got a breakdown here under this basically 9,900 zone on ENPH. FSLR is breaking under the 50-day moving average. We can keep an eye on those bad boys if we need some shorts. I'll need to see how they open. I would hate to chase those down in case it's a fugazi, but let's take a look here, guys. So let me know if you have any questions, man. I love you guys. Take care. Peace in the Middle East, as they say. That's an old 80s term. And, dude, have some fun, man. Get outside, get moving, get shaking, and, of course, do your stock homework. I love you guys. Peace.